We are 4 hours into the trading session. It's October 5th. Hello, traders. Let's see what the market's doing today. We had a nice gap higher. You can see how we were able to get through the prior high from Friday. A little bit of selling on news that President Trump had the coronavirus. Nothing heavy, though. So the fact that his health is improving, we shouldn't get a huge rally. Now, a lot of this rally right here is due to the stimulus bill. I've been telling you that for the last 5 or 6 days. Every little whisper that we get out of DC, if it's somewhat encouraging, market rallies off of that news. Right now, Steve Mnuchin and Nancy Pelosi are meeting. Even if the comments after the meeting don't go well, as long as they continue to hold these meetings, the market is going to rally on the notion that sooner or later a deal is going to get done. And that's really all the market cares about right now. It doesn't even care about the economic data points. We had a little bit of a soft ISM manufacturing report last week, had a little bit of a soft unemployment report. Market did not care. As long as the data points are somewhat in line, it just wants that stimulus. The market's addicted to easy money. It wants that bill. So if all talks fall apart and it looks like there's no chance for a bill, then you're going to see a market decline, perhaps down to that 100-day moving average. I don't see that happening. I think both parties want to retain their face until the election. They don't want to look like the bad guy. They're going to try and keep the talks going and see if they can come to some kind of agreement. And we do have the economy starting to slow down a little bit. So small businesses and workers do need that stimulus bill. So right now the market rallied up on that news, really took place in a half an hour. Boom, 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 boom. Market went higher, and now we're absolutely flatlining. So market has been able to get above that 50-day moving average. Let's put the daily chart up. We're going to put the major moving averages up so you can see where they come into play. And you can see that the 100-day moving average is where we found support. If we do get a market drop, I believe that it's going to come back in and it's going to find support before we even get to that 100-day moving average. I can feel the strength of the bid improving every single day. And we've had a couple of negative news items along the way. Market has been undeterred. I view this entire drop right here as nothing more than profit taking off of a buying climax. And now you can see the downward sloping trend line. We're above it. Now we're actually above that 50-day moving average. There's a chance if we don't get a bill that, yes, we're going to waffle back and forth above and below that 50-day moving average. But as an option trader, in particular as a premium seller, what do I care about? I really care about the market just being able to tread water, and I do not want to have the rug pulled out from underneath me. I don't think that that scenario is in the cards right now. I see a really good bid. So stocks that have relative strength, I can go out of the money. I can sell bullish put spreads below technical support on those stocks and let time decay work its magic while the market waffles back and forth waiting for this stimulus news. That's the game plan. As a swing trader, I think that you can get a little bit more aggressive with those trades each and every day. Earnings season is going to be firing up in a little more than a week. We're going to actually be looking at some earnings trades right now. I've shown you a search that I like to use, so let's get to it. Market first, market first, market first. I believe the market at very least is going to tread water. If we get any kind of little bad news, it's going to be a blip. We're going to get a little pullback and an instant bounce off of that pullback. More than likely, the news will continue to be decent. There'll be a promise that the stimulus bill is going to get passed. Tick, tick, tick. The market will float higher. So that's what I'm expecting. Now, if I go into my searches in Option Stalker, I've got one that's called Buy into Earnings. Well, what is this search and what does it do? I've collected data over the course of the last 3 years, and I, in particular, monitor stocks once they approach earnings season. I know that these stocks have a tendency to rally into their earnings announcement. So 2 weeks out from that earnings announcement, these stocks rally more than 75% of the time into that earnings announcement. Well, now all I have to do is find out which companies are 2 weeks or less from announcing earnings. Ding, 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 ding. Here's your list, ready made for you right here, just waiting for you to go through and use that probability to your advantage. Let's not stop there. Let's look for stocks that have really good relative strength. Let's look for stocks that have nice breakouts on heavy volume, and then we can increase our odds of success even more. So if I go to this list, you'll see in the very far right-hand corner of the list, option liquidity is marked. Well, that's because I like to trade options. Let's say that you don't care about options. Let's say you're a stock trader and you simply want to buy some shares, hold them for 2, 3, 4 days into that earnings announcement. Yes, this strategy will absolutely work for that as well. So if I take a look at, let's say AMTD is up at the top of the list. Today it's relatively weak. You can see how it gapped higher, it pulled back. We'll go into that daily chart though, and you can see here that you've got a nice horizontal breakout right here. That's going to be your first line of support. Stock rallies above that resistance level, tests it. Now that support level has been confirmed, and you've got the stock moving higher today. Hover over the E. Oh, they announce earnings on October 19th, which is in 2 weeks. So the strategy there would be to buy the stock and to hold it and to look for some visible technical support that I can use for my stop. Well, if I hover over this candle here, you can see that that high of the day was 39.85. And on this one, it was about the same, 39.85. And right here, you can see the low of the day was 39.62. So that 39.50 level, that is a nice bona fide support level. And so my stop would be if the stock closes below 39.50, I need to exit that trade. The stock's not doing what I expected it to. That support level should have held. Now, what does that mean on a closing basis? The stock can do anything it wants during the day. If I'm swing trading, I don't care. Obviously, if there's a 10% correction and some fraud or something, yeah, obviously that'd be the exception. But otherwise, stocks move around during the day. Let them move around. It's the close that I care about. So in this particular instance, I would be checking the stock 5 minutes before the closing bell. And if it is below 39.50, then I have to stop out of the trade. Another stop that you could use is you could use the 50-day moving average on the SPY in conjunction with the stop on the stock. Remember, market first, market first, market first. Well, if the market's trading below that 50-day moving average and I want to be very passive in this strategy, then that would also be a condition that I'd like to attach to the trade. That is how I would manage it on the downside. But you can see that I've got a number of influences working for me on the upside in this particular case. Number one, I have a breakout through resistance. Nice. Tested that support. It held. Nice. I've got some relative strength because the stock has been continuing to push higher in here. That's also good. And I have the stock announcing earnings in 2 weeks. And I know that once it gets inside that 2 week window, it has a historical tendency to rally into the number. That's how I would manage the trade. That's exactly how I would set the trade up. So if you're a stock trader, look at all the choices that you have available to you. Lots and lots of stocks. But I want to focus on options. We like to trade options, so I'm going to click option liquidity, and that's going to narrow my universe dramatically. However, realize that earnings season really doesn't kick off for another 3 weeks or so. As we get closer and closer to that climax of earnings season, this list is going to get plenty long. So let's take a look at the top stock on it. And as I click ALLY, I can also notice BAC, Citigroup, JP Morgan Chase, Morgan Stanley. Aha! There's a theme here. All the financials have a tendency to rally into their earnings announcement. At least these financials do. And Ally happens to be the best of the group right now, technically. How do I know that? Well, because I've gone through and I've flipped through these charts. It's making a new relative high. The volume has been excellent. And if I click through JPM, just as a comparison, look, that stock's not doing anything. In general, financials have been very soft relative to the market because a low interest rate environment is not good for them. A stimulus bill sure would perk these stocks up though, but I want a stock that is making a new high. This is relative strength. And I know it has a tendency to rally into the earnings announcement, so that's also excellent for this position. So now what we're going to do is we're going to take a look at what options we might have available to us. So I'm going to click on the option chain, and you can see that this stock only has monthly option expirations. And so I'm going to click on the October 16th expiration date, and I'm going to look for something that is in the money. Now, I'm not going to get a lot of premium for these by selling out of the money bullish put spreads because financial stocks don't have a lot of volatility to them, and I can only do a October 16th expiration, which incidentally, it's very important that we take a look at what that earnings release date is. So I'm going to go back to the ALLY chart and hover over the E, and there I can see 10/16 is the date of the announcement. Well, that is a Friday, so that would mean that they're going to be announcing earnings before the open. Well, if I trade an October 16th option, which is what I'm in right now, those options expire after the closing bell. So yes, they span that earnings announcement date, which is very important when I'm buying premium because that is going to retain the time value and the implied volatility until that actual earnings announcement. Now, I am going to be out of this trade by the close October 15th. Okay, I do not hold over earnings. Let me repeat that. I do not hold over earnings announcements, period. I never do. And the reason for that is it's a crapshoot. I've tried to predict earnings announcements for over 15 years. I've traded them like mad. I've tried every strategy imaginable. And my conclusion after all that time is that it is a 50-50 proposition. Sometimes you're going to win, sometimes you're going to lose, but in general, it's a gigantic waste of time. So I don't bother with it. I'll trade stocks before the earnings announcement. I'll trade stocks after the earnings announcement, but I do not hold over the number. I might as well go to Vegas and just put all my money on black or red. Then I'll have at least more fun gambling because that's exactly what this is. It's a crapshoot. So I do not suggest holding over the earnings announcements. So you must be out of this trade Thursday, October 15th. So I want to buy an option that's in the money, and we know that the stock is currently trading at $27.25. So I'm going to look at the $25 calls. Those are in the money. And there we can see that they're offered at $2.70. The stock is in the money by $2.25. So I'm paying premium for these options to the tune of about 40 cents. If I go a little bit further in the money to the $24 strike price, which also would work, let's say I could pick those up for $3.50, which I should be able to. It's close to the ask. Okay, now I've got those options would be in the money by $3.25. So now I'm paying 30 cents in time premium. Not bad. They're going to trade point for point with the stock, and that really is the critical point to all of this. So I could buy the $24 calls, I could buy the $25 calls. Either of them will work. As the stock continues to tick higher, these options will move point for point with the stock. So please remember, on this trade, you must be out on October 15th. And you want to have the stock maintain that price point and that breakout right in here. So my stop on this, if you take a look at the chart, I'm going to hover over these candles. You can see that that high was 26.34, 26.24. So roughly about 26.34, I'm going to look to the right, and I would like to see this candle, at least half of it preserved. And that puts me right at about the $26 level. I don't like getting ticked out of trades, stopped out of trades on just a little test of that support. So $26 is below that, below that. It's about the halfway point of this long green candle. So as long as the stock closes above $26, I stay with the trade. As long as the SPY is above the 50-day moving average, I stay with the trade. And I take advantage of that historical tendency for the stock to grind, grind, grind higher into earnings season. And I have a belief that the market has found its footing. The bid is strong, the bid is improving. Traders are expecting a stimulus deal, and I think that it's likely that it's going to get done because you can see the positive price movement in the market right now. That's my trade of the day. That's how I would approach it from an option standpoint. I've also shown you how to trade stocks heading into earnings season. This search right here, this buy into earnings search, is fantastic with or without options. I've also been showing you in custom search how I can extend that 2-week window out 3-4 weeks if I'd like to, and focus on those stocks that I know are going to have that tendency to move higher. If you like this content, please give it a thumbs up. Make sure to subscribe to this YouTube channel and turn on your notifications so that you never miss any of these videos, because I promise you in every single one, I'm going to have some really great trade ideas for you. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.